From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 1st, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we can look for entry and exit opportunities this week. We have a fairly active news calendar this week, the entire week, and so you'll want to keep an eye on your financial calendars for the latest releases. Just a couple to touch on real quick before I begin my analysis for today. Coming up between today and tomorrow, overnight hours for the East Coast U.S., 12:30 a.m., we have interest rate information out of Australia, so you'll want to keep an eye on that if you're trading any Australian pairs during the overnight Eastern U.S. time hours for this week. And then we go all the way, we have some news between here and there, but go all the way into Thursday. We have monetary policy and rate information out of the UK. Definitely something that you'll want to keep an eye on as we go towards Thursday's time frame. And then, of course, ending the week with some activity as well on Friday, Canadian employment data and also non-farm payrolls out of the U.S. So a pretty active news calendar, to say the least, coming up this week. So use appropriate risk strategies in all cases. Let's get started with some analysis here for this week. Starting on the U.S. franc, last week we saw a significant sell-off on this currency pair. What was a pretty decent uptrend beginning on the right-hand side of the chart along the blue trend line after the black trend line, what was a pretty decent uptrend that started moving higher into the mid-9900s, significantly sold off and now back into the 9600s all the way down here, back underneath the red trend line towards the green trend line. So some interesting things happening last week here for the U.S. franc. Zooming in a little bit again, we have this green trend line. That's something interesting to look at as we see the low down here at the very bottom connecting with this low, and the market came very close to that on Friday, right into the low 96s, and has been repelled off it a little bit. Something else interesting is Fibonacci from the low of the blue trend line to the current resistance high. The low to high with Fibonacci puts the 618 fib right here, right around the 96.85 or so level, top of that blue shaded area where the current market is. So we can see the market falling back to the 618 of this uptrend. The question is it going to continue to pressure lower or turn around? And I think some of the news events this week may be the catalyst for either continuation lower or reversal for this to go back down. If you're going to sell this currency pair, if you say, hey, last week we sold off pretty strong, we need to sell it, I don't think right now is the best time to sell it. Obviously, it's sitting on top of support. So there's two reasons to sell it. It either goes back up to the yellow shaded area, that's back into the low to mid 97s, or it finally breaks down through that blue shaded area. So those are the only real two reasons I would look to sell the U.S. franc this week. Rally back to resistance or break through our current support, which it obviously has not done yet. The other thing to look for is support and reversal. Of course, as long as it stays inside that blue zone, we could be looking for clues and evidence of reversal. We've seen the market reverse off it before. Just go back here where the blue circle is on the left-hand side. We've seen the market reverse off of here before and go back up at least to the yellow shaded area. So that's something we might watch for as we go through our day today. Let's go down here to the 4-hour time frame. You can see the sell-off last week. Interesting, this candle right here, the body with the long wick on the bottom, and the market just hesitating right around 96.80. Again, watching for evidence of reversal, I think from the 618 fib of that previous trend range where we are right now could lead us to an opportunity to go long back to the yellow shaded area at least. The risk, of course, is underneath that low. So it's pretty high risk for a fairly positive reward back to the yellow zone. So use appropriate risk strategies if you decide to do it. I still think that right now is not the best time to go short, but looking for some bounce back from that sell-off might be your opportunity for the day today. Moving over to the euro dollar, similar situation except opposite. We saw the rally last week and it moved back into resistance zone. Interesting here, the green trend line coming down from the top in this currency pair, highest high, mid high, and now we're back into that same area. 100 period moving average sitting in there as well. Zooming in, there's your 100 period moving average sitting up here closer to the yellow zone. Pink shaded area right now, obviously resistance. You don't want to buy this right now. Terrible place to buy it, into resistance. If you're going to buy it, you need it to break through this resistance, the pink shaded area, or bounce back down towards the green zone at least. So buyers, it either needs to go down or break through resistance if you're going to buy the euro dollar. Sellers are watching for clues to resistance and reversal from the pink shaded area. That's 111.75 to 111.95 in that side, that pink shaded area right there. 4-hour time frame, again, you can see some evidence of the market pulling back again. Look at this candle from last week, the small body, long wick on top, market holding underneath 1175. So I think if anything today, you don't want to buy this underneath here, but either it goes down to the green zone or breaks back above the pink shaded area to buy it. Those are your only two opportunities. The other opportunity is watching for selling into 1175. Your risk would just be above the pink shaded area. That way, if it broke above it, you wouldn't want to stay in it very long, targeting back down to the green zone for the euro dollar today. Moving over to the GBP, we're stuck in a little period of congestion or a range here. Take a look at that black box. The market's just kind of stuck inside that black box and has been for several days now. Zooming in a couple of times here on the daily. It doesn't really help us out a lot to do that because that big red candle skews the chart. But again, you can see that black box and how many days we've been just stuck inside that little range. 4-hour time frame gives us a little bit better perspective. We did have that push above it over here, but for the most part, we've been stuck inside there. If you're going to sell it, obviously the best place to sell is the yellow shaded area. If you're going to buy it, obviously the best place to buy it is the purple zone. It has been for the past several days here for the pound dollar. The only thing we would look for next would be the push above the yellow zone or below the purple zone. Keep in mind, coming up later this week, Thursday, some significant interest rate news out of the UK, and monetary policy could change the entire scenario here for the GBPUSD. I think it'd probably be better, at least at this point, to focus your efforts on going short here for the pound dollar, but definitely watching for the breakout of the yellow zone could change that. So selling the yellow zone, maybe under the green zone or under the purple zone, might be your best opportunity given the anticipation of a change of interest rates coming up on Thursday. So definitely watching for that. But we don't want to discount the fact that it has been moving higher over the past couple of days. So keep that in mind. But I think going short would be the best opportunity. Yellow zone, under the green zone, or under the purple zone for the GBP/USD this week. USD CAD, something we need to keep in mind for this currency pair, of course, the rising trend along the blue trend line. It has fallen back over the past few days, but the rising trend along the blue trend line, and we also want to keep in mind the continued falling oil prices. Falling oil prices is not great for the Canadian dollar, and we could look for this to start rising. If oil continues to slide lower, we look for this to potentially start going back up again. That's really what's caused this rise here, are the falling oil prices that we've seen over the past few days. So keep that in mind if you're going to be trading the US CAD. Zooming in a little bit more here, and you can see the blue trend line, the rising trend pattern, the fall, the rise, the fall, the rise. We're in the fall. Now we're looking for support and a potential for the rise again. So anyway, anywhere you look at it, you're looking for support. That's potentially down here at the blue trend line where the blue shaded area is, 100 period moving average sitting down there. The fall, the rise, the fall, the rise, the fall. Now we're looking for the next rise again, aren't we? Each one of these shaded areas has potential to hold as support or resistance. Right now we're just toying around with the pink zone. For the day today, as long as it stays within or above that pink zone, could be the beginnings of the next phase of the rise here for the US CAD. And again, keeping an eye on those oil prices. Back to the yellow shaded area would be your next resistance. And of course, above the yellow zone, we'll look for likely a new high to be made above the green shaded area given the pattern that we've seen here. So buying into support, I think, is still going to be a better idea. The only reason I would change my mind back to going short here would be under the blue zone, underneath the 100 period moving average, and underneath the blue trend line. And again, we would likely look for oil prices to go back up if that's the case for the US CAD. If oil prices go back up, we look for this to continue to go back down for the US CAD. Moving on over to the USD JPY, a significant sell-off last week. So we had some BOJ news last week. Significant sell-off coming back down into the 102 level. This currency pair, I have hesitated to trade this currency pair recently because of the significant volatility we've seen and unexpected moves like we see right here. So I haven't been trading it, but I think if you're going to look for a sell, you needed to go back up before you would sell it. Buyers are watching for clues to support reversal. The closer, of course, that it gets down here towards 101 or even into the 100.50 level, the blue shaded area, the very bottom of the chart. 4-hour time frame. Right now, we're just kind of stagnant here on the US yen, right around 102.20 to 45. If anything, I might zoom it way in here on the 4-hour time frame and say you're looking for a little breakout of the congestion. Above it, 102.45 might look for a little retracement back higher again. Below it looks for the continuation underneath 102.20 back down into the mid to low 101. So at least at this point, looking for a breakout of this yellow zone. this week for the US yen. Moving over to the AUD USD, again, we do have some significant news over the next 24 hours for the Australian dollar. You'll want to pay attention to that if you're going to trade this currency pair. It's been in both directions. Really, if I take one of these blue boxes here, in fact, let me just do this. I'll take the black box and just bring it over here like this. And we can see that over the past several weeks, really, we have been kind of inside this black box. We found resistance where the red circle is, a little bit of dip below on the Brexit news, but then came back up. This little blue box here, orange zone, pink zone, orange zone, pink zone. So right now, we're towards the top of what has been a little bit of a period of congestion or ranging here for the Australian dollar. Again, you can see the rising green trend line, but again, I think we're bouncing around in here. Could be the beginnings of a head and shoulders pattern. The red circle on the left, the area right here in the middle where you see the resistance high, and now we're on the right-hand side where the pink zone is. We talked about that in the trade room on Friday. Red circle is resistance. We're in that same area, 7,600. So I don't think I would be ready to buy this currency pair unless it broke through 7,600. Zoom it in a couple of times here, and again, take a look. Resistance here, resistance here, resistance here. I don't think I'd be ready to buy this currency pair as long as it's inside that pink zone. Watching for evidence of reversal would be a good idea, or potentially, eventually, the breakout above 7,600 could give way to the rise into the mid to upper 76 in the green shaded area once again. So interesting area, but I just don't think I'd be ready to go long here on the Australian dollar. 4-hour time frame, again, you see a pretty significant bearish candle after this move coming back down into the 570 level. Again, I think if it breaks down underneath that pink zone, you might even bring that up a little bit, maybe not too much, but just a little bit closer towards 75, 75. But getting in there towards 75, I think as long as it stays within and under this pink zone, I think you're looking for some short-term reversal, keeping an eye on the Australian news in the overnight hours. The only reason to buy this, I think, would be a breakout open and close above 7,600 on the Australian dollar this week. And finally, moving on over to the NZD USD, the New Zealand dollar versus the US dollar. Similar, actually, situation that we just talked about on the AUD USD. We've seen a couple of different things. This blue box, probably most importantly. If I zoom out one more time, you can see we've been in a long-term uptrend, but we've been bouncing around inside this blue box here for the past several days. Let me take this one off, this little blue box here, if I can get it selected here for us. Take this one off. So the big blue box that you see here on the chart, we've been bouncing around in there for the past several days. Support at the orange zone, resistance towards the green and the pink shaded area at the top of that blue box. So very interesting there for the New Zealand dollar. Back zooming it in on the daily time frame, we're up towards the top. So again, I would think that you're looking for resistance for this currency pair into the green and the pink shaded area. It'd be a difficult place to go long, wouldn't it? All the way at the top. Remember your old trading motto, buy low or sell high. If you're at the highest peak high, top of the trend, difficult place to go long. If you're looking for anything, it might be better and more prudent to look for resistance and reversal. Just think, if you did that here or here, you had a significant opportunity for profit on the way down. So resistance and reversal is a better idea, I believe, here for the New Zealand dollar. If you're looking to buy this currency pair, I think you want it to go down. Take a look where the best opportunities to buy it were all the way down here into the 6,900, into the 6,900s, down here towards the orange shaded area. So difficult place to go long, maybe a better place to look for resistance and reversal here for the New Zealand dollar. 4-hour time frame. Take a look at what's happened over the past several hours, really since market open. We found resistance into the green zone, and it turned back down towards the blue zone. If you're looking for any significant opportunity to go long, you're probably there right now. The blue shaded area, probably your very best opportunity for support here for this currency pair. I think the next opportunity, and the better opportunity, I think, for me, would be a push above 72.30 or so, 72.35 above the green zone, gives way to the rise towards the green zone. So buyers looking at the blue zone as a potential support, an opportunity to go long, break above the green zone, looks for it to go long. Otherwise, watching for further evidence of resistance and reversal. We've already seen that from the green zone. Under the blue zone gives way for the next continuation lower back down here. And I'm going to pull this down just a bit. This yellow shaded area, 71.20 or so, becomes your next potential support on the way back down. And if it gets under the blue zone, that's your next target on the way back down for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.